So, you thought your newsfeed was already a roller coaster? Well, buckle up, folks, because former president and, let's be honest, current headline generator Donald Trump is back. And he's got his sights set on trade. Again, it's May 24th, 2025, and the world of international commerce just got a fresh jolt of uncertainty. Trump has announced some pretty hefty new tariff threats. Who's in the firing line this time, you ask? Oh, just the entire European Union and your beloved Apple products. This latest announcement has sent shivers down the spines of economists and business leaders globally. We're talking about significant financial penalties on goods flowing between some of the world's biggest economic players. Imagine your favorite European cheese suddenly costing as much as a small car, or your next iPhone upgrade requiring a second mortgage. The core idea is that things could get a lot more expensive, very quickly. And it's all happening just as everyone was hoping for a bit of calm after, well, everything else that's been going on in the world. The timing of this is classic Trump, really. Just when you think things are settling down, he throws a curveball. So grab your popcorn, or maybe an antacid, as we dive into this latest chapter of global trade drama. Alright, let's get down to the brass tacks, the nitty-gritty, the actual numbers that are causing all this commotion. Trump isn't messing around with small figures here. He's proposed a whopping 50% tariff on all imports coming in from the European Union. Yes, you read that correctly, 50%. This would cover a vast range of products, from German cars to French wine to Italian fashion. But wait, there's more. It's not just the EU feeling the heat. Trump also threatened a 25% tariff on all foreign-made smartphones. And yes, he specifically called out Apple. He's been saying for years that iPhones sold in the US should be manufactured domestically. So this 25% tariff is basically a giant nudge, or maybe a shove, in that direction. Imagine the price of your next iPhone jumping by a quarter. Now, to be fair, or perhaps to spread the pain evenly, Trump did clarify something. He said this 25% tariff wouldn't just hit Apple. Any phone not assembled on American soil could face this extra cost. Let's talk about Apple. Because, let's face it, Trump seems to have a special kind of focus on the tech giant. He's been on Apple's case for years, pushing them, urging them, practically begging them to bring iPhone manufacturing back to the United States. This new 25% tariff threat on foreign-made smartphones is the latest and perhaps most forceful attempt to make that dream a reality. The thing is, making iPhones in America is complicated and expensive. Analysts predict that if Apple were forced to move all its iPhone production to the US, the cost of an iPhone could skyrocket. We're talking about a $1,200 iPhone potentially costing anywhere from $1,500 to a staggering $3,500. Apple has been diversifying its manufacturing away from China, but not necessarily towards America. This tariff threat feels like a direct challenge to Apple's current global strategy. It's a high-stakes game of brinkmanship, and Apple is right in the middle of it. So, what happens when a former president, who might just be a future president, starts talking about massive new tariffs? Well, the stock market tends to get a little jumpy. And by jumpy, I mean it often does a little dive. Predictably, Trump's announcement caused an immediate stir in financial markets around the world. The S&P 500 index, a big benchmark for U.S. stocks, took a hit, dropping by about 0.67%. That might not sound like a huge number, but in market terms, it's a clear signal of investor nervousness. It wasn't just Wall Street feeling the jitters. European markets also reacted negatively. Germany's DAX and France's CAC 40, two major European stock indices, were down more than 1.5%. And what about Apple, the company specifically named in the smartphone tariff threat? Their shares didn't escape unscathed. Apple stock fell by about 3% following the announcement. Investors are clearly worried about what these tariffs could mean for Apple's production costs and ultimately its profits. But it wasn't all doom and gloom for every asset class. In times of uncertainty, investors often flock to what they perceive as safe havens. Gold prices, a traditional safe haven asset, surged by a notable 4%. People are looking for stability when trade wars loom. This immediate market reaction underscores the seriousness of Trump's threats. It's not just political posturing. These announcements have real-world financial consequences. Section 5, Across the Pond, How the EU is Responding to the Pressure. Now, you can't just announce you're going to slap a 50% tariff on an entire continent and expect them to say, "Oh, okay, cool." The European Union understandably had a few things to say about Mr. Trump's latest trade bombshell. Maros Sefcovic, who holds the rather important title of EU Trade Commissioner, was quick to respond. He emphasized the EU's commitment to trying to secure a mutually beneficial deal, but, and this is a big but, he also made it clear that the EU is ready to defend its interests. It was a polite diplomatic way of saying, "We want peace but don't push us." German officials also chimed in, and Germany, being a huge manufacturing and export economy, has a lot at stake. German Foreign Minister Johann Wadephul voiced support for the EU's efforts to negotiate. He stressed the importance of preserving access to the American market, which is vital for many German industries, especially car manufacturers. He also warned that these kinds of tariffs could seriously harm economic development not just in Europe, but in the United States as well. Other European leaders echoed these sentiments. The message from Europe was pretty consistent. Let's talk, not fight. The EU's stance seems to be one of cautious diplomacy mixed with firm resolve. If you've been following Donald Trump's career, either in business or politics, you'll know he prides himself on being a deal maker. And when it comes to international trade, his approach has been, shall we say, distinctive. These new tariff threats against the EU and Apple products, they fit right into his well-established playbook. Trump has consistently used tariffs, or the threat of tariffs, as a primary negotiating tool. It's like walking into a car dealership and immediately threatening to slash the tires unless you get a discount. It's aggressive, it's confrontational, and it definitely gets attention. This isn't the first time the EU has faced this kind of pressure from Trump. Just last month, in April 2025, he had announced a 20% tariff on most EU goods. So this new, even higher 50% threat feels like an escalation, a way to turn up the heat as those talks are supposedly happening. These tariff threats, especially the sweeping 50% on EU goods and 25% on smartphones, aren't just a bilateral issue between the US and the EU, or the US and Apple. They have the potential to send shockwaves through the entire global trading system. Think of it like a delicate structure of interconnected dominoes. If one big domino falls, it can trigger a chain reaction leading to widespread instability and disruption. That's the fear here. Global trade relies on a certain level of predictability and adherence to established rules. Sudden large tariffs throw a massive wrench into those works. One of the biggest concerns is the risk of retaliatory tariffs. If the US imposes these hefty duties, it's highly probable that the EU and potentially other affected countries will respond in kind. Trump's tariff threats are grabbing all the headlines right now. It's important to remember they aren't happening in a vacuum. The global and US economies are already navigating a complex and somewhat choppy sea as of May 2025. There are other significant economic pressures and policies at play that add layers of context and perhaps concern to this latest trade drama. For instance, the US continues to grapple with a substantial trade deficit. In March 2025 alone, the US imported $91.9 billion from the EU, resulting in a monthly deficit of $47 billion with just that block. This is the kind of number that fuels Trump's arguments. Inflation is another persistent worry. Recent Purchasing Managers Index, PMI surveys from May 2025 actually indicated faster than expected growth in both services and manufacturing sectors, which sounds good, right? But there's a catch. These same surveys also showed the sharpest rise in input prices in nearly 3 years. That means the cost of doing business is going up, which often translates to higher prices for consumers and stokes those pesky inflation concerns. Adding hefty tariffs on top of already rising input costs could be like pouring gasoline on a smoldering fire.